Aloha and welcome. So, what are the options for loading cash value into my tax-free cash growth warehouse account? This is a question that comes up in a roundabout way, such as,
If I don't front load my account, I can always add to it any time later, can't I?
and the answer isn't as simple as I wish it were. Why I haven't thought to address this question here before now, I don't know, but I am now. So, there are actually a number of ways to pump up the cash value of your tax-free cash growth warehouse. However, there are some restrictions as well. Um, and different providers have different regulations. So I'm going to focus on our favorite uh, provider and the restrictions that are in place with them. So why is this provider our favorite? Well, first, because they offer all the needed design options for a proper infinite banking tax-free cash growth warehouse account. Secondly, because they pay consistently the highest dividend interest of all. Thirdly, they have the lowest policy loan interest rate. And fourth, they offer non-direct recognition on policy loans. They have the whole package. It's complete for me. They make it easy to design and create the best possible tax-free cash growth warehouse account for infinite banking. Now, the obvious way to maximize the cash value of your account is to front load it when you establish the account. Of course, the biggest caveat there is to be mindful of the MEC limit, MEC. We don't want to lose out on the tax-free growth benefit. So we need to stay below the MEC limit.
For an explanation of what a MEC limit is, see our frequently asked questions answers here. There's a short video about what is a MEC limit or what is a MEC, M-E-C. Check it out.
Other than front loading cash into your policy at the start, a very simple way to add to the cash value is the option to add up to 10% of your annual paid up additions premium in any year, starting with the third anniversary. So if your annual paid up additions premium amounts to $1,000 annually, you can add another $100 without any exams. However, this addition must be done on the anniversary of your policy and only up to age 65 of the insured. And all that's needed to do that, though, is to just call your agent or the provider's customer service department and set up for the additional deposit. Two other ways to add to the cash value is to prepay the term rate or add unscheduled paid up additions. Prepaying the term rider doesn't require a medical exam either. But again, there are certain restrictions. One is that you have to wait until at least the second anniversary of your account. As long as your account is at least 2 years old, you may prepay this rider up to the MEC limit.
Now, this prepayment option must be done within a 60-day window of your policy anniversary date. So from 30 days prior to the anniversary date to 30 days after the anniversary date, that's your window where you can prepay this term writer?
Adding to the paid up additions rider is also subject to the 2 anniversaries rule. But anytime after the 2nd anniversary, you can apply to add to the paid up additions as unscheduled paid up additions. Now, this adding unscheduled paid up additions option doesn't have to be done with any particular window, just after the 2nd anniversary of your policy. And you will have to be you will be required to take another paramedical exam and qualify for the additional insurance. So also, with all 3 of these last options for adding to your cash value, there is a catch-up provision. That is, if you haven't maxed out your cash infusion to the MEC limit with scheduled additions for a year or more, you can catch up to that limit now. Let's say the MEC limit for your account is $50,000 and your total annual premium amounts to $15,000. That gives you $35,000 that you can add in additionally per year without exceeding the MEC limit. So if you haven't added any additional funds to your account for the last 2 years, you now have $70,000 room to catch up and still not exceed the MEC limit. Obviously, you can't catch up to the MEC limit with just the 10% paid up additions premium adds, but you can catch up on that first option. So that is, if you haven't used that 10% option for a number of years, you can add whatever that amounts to now, as long as the total of adds with everything included, with the other options, along with this 10% catch-up option, won't exceed the MEC. So if you haven't used the 10% option for, let's say, 5 years, and using the same example of $1,000 annual paid up additions premium, as we did a minute ago, 10% would be $100, times 5 is $500. And as long as you have at least $500 room before hitting the MEC limit, and the insured is no more than 65 years of age, you can go ahead and add that much into your cash value without any medical exam. And there you have it, folks. Because of the desire to increase the cash value and therefore increase the growth of cash value by dividend interest, we always design accounts for our clients with the greatest number of options for this built in. These designs also make customization possible in later years of the account as well. You have questions, we have answers. We're here to help. For a full overview of the awesome benefits of the Infinite Banking Tax-Free Cash Growth Warehouse Strategy, watch our free webinar, How to Become Master of Your Financial World, by clicking the link in the description box right below here. And be sure to subscribe to this channel and bookmark it as well. That way you can easily come back to search for answers to frequently asked questions about the Infinite Banking Tax-Free Cash Growth Warehouse Strategy, and you'll be notified as we add more content. Please post your questions and comments here. Aloha and mahalo for watching.